I'm Dr. J. You're going to be hearing from Mr. Top Step in a second. Mr. Top Step is called Top Step because the very top ring of that pit, that's where the biggest traders stand. You want to know what they're doing, you got to watch Mr. Top Step.
Hello, this is Danny Riley from the CME Group on this December 15th. The markets are again exactly what we've been saying all week, and we don't want to bore you guys with this. We're dead smack into the end of the roll, going into the end of the DEIS expiration, and things have really buckled down. About a couple of days ago, we mentioned that a very large trader mentioned that a lot of the liquidity in some of these markets are starting to evaporate, and that's kind of what we're seeing here as far as the markets are concerned. Over in the Eurodollar options, they have about 250,000 traded. In the 10-year note options, they have
50,000.
Thank you, Jason. 50,000 traded. And as far as the S&P is concerned, we're holding. We're a little lower, but we're really not doing anything. If you subtract the spreads out of the index markets, the NASDAQ, the S&P, the Russell, the mid-cap, etc., you'll find out that about 80% of all the trading volume that we're seeing is all spreads. So, we could talk a little bit about the upside or downside of the S&P, but really, that's really not what people are looking at right now. They're really looking at rolling positions. We're going to bring on Tim right now from Top Notch to give us a little update from what he feels is going on in the S&P. Also, moving forward, we're going to try to do a little bit more about some of the things that are going on inside the CME. On December 4th, the CME announced that they had reached $185 billion in notional value in their foreign exchange area. This is a gigantic thing. A lot of the interbank stuff that goes on is done through the banks, foreign exchange, but the CME's foreign exchange products have taken off. $185 billion in notional value. Nobody can sneeze at that. Now Tim's coming on right now.
Top Notch trading back, and as the market winds down into the year end, boy, all it is a grind. The only thing that's going in the S&P for the last couple of days is Dubai was a little get bailed out over the weekend. They made a low of 99.25 in the SPOO for the weekend low, and their weekend high is 13. So for the last 2 days, we are inside that trading range, and that's the biggest technical standpoint right now. The only idea is which way they're going to go. Are they going to take out the weekend high of 13, or are they going to take out the weekend low of 99.25? The overall breadth of the market this morning came out negative. The declines were way in front of the advances, and now all of a sudden we see it shrinking. There was more than 100 million on the decline this morning. That's down to about 700,000 at this time as we speak. So it looks like they're squeezing out the shorts, and there's good possibility we're going to see that high of 13 even. And is it going to be today, or are they just going to grind? Really, there's nothing going on. We are in a holiday atmosphere. It's just a tough market to trade. Everything, from the Eurodollar to the bonds, just everything. What I can see is maybe there will be a little bit more of a holiday push at the end of the season here. And next year, I really believe something's got to give. With the light volume and the small ranges, I just can't see how to trade this. It used to be a position and then we'd hold on, and now it's becoming more of a position and scalp our way out of the market, and hopefully we become hogs, get a little fat that way, and then if we hit them right, then we become oinkers and we become pigs, and we see that follow through. But the biggest thing that S&P never did when I called to sell the farm at the 1108.30 price in the S&P, they never took out 82. Never. They did this move on the Thanksgiving weekend, and we saw a low of 67 on the 24-hour and 77.5 on the regular, but that was a blip. The real trade needed to see 82. That hasn't happened. So right now, there is an ascending trend channel in the SPOO, and the March contract, which is the lead month now, is above the year high 19, and their target right now is 1930, and every day it ascends by about 60 cents. So that's another reason there could be another positive move as the holiday trade comes to an end.
All right.
Good luck,
all right,
and we'll see you soon.
Last thing that we're going to add is Floor the movie is going to be premiering in Chicago on January 15th of next year. It's a great look at some of the largest traders from the CME and what's happened to them since electronic trading came in. The way we see it, there's been a big turnover of traders down here, and the traders that are on the floor now are not the same type of traders that they were back in the day when open outcry was predominant. Right now, a lot of these traders that are in the pit in the S&P over in the bonds over here, they're hybrid traders. They're trading electronically directly against the open outcry market, and they're making money, and that's all we've got to say for this week.